Welcome to Don't Retire, Graduate, a podcast that asks you what you want to be when you grow up so you can graduate into retirement with purpose and with passion. I'm your host and valedictorian, Eric Brotman, and this is the 6th season of our show. Every other Thursday, we'll be bringing you interviews with amazing guests, and on alternating weeks, we're hosting our Diary of a Financial Advisor segment where we interview financial advisors about their professional journeys and their passion for helping others succeed. Please, if you haven't yet, take a moment to subscribe so you never miss an episode. Today, I'm very pleased to be joined by Jamie Mendelsohn. Jamie's the Executive Vice President of Ashar Group, a family-owned, nationally licensed life settlement broker. The definition of Ashar is do what is right and you will be blessed. Since 2003, Ashar Group has partnered with financial professionals, fiduciaries, broker-dealers, and institutions, serving as an independent advanced planning resource dedicated to education on the importance of treating life insurance as an asset. She's a frequent speaker at estate planning councils and financial professional associations around the country and a contributor to industry journals. Jamie's the go-to resource for advisors and policy owners looking for a profitable exit solution for their existing life insurance policies. She's also an awesome human being, and I can't wait to introduce her to our audience. Jamie, welcome to Don't Retire, Graduate.
It's great to be here. Thank you for having me.
This is a departure, at least slightly, from our normal show, in that you are in our industry, at least affiliated with our financial industry, and a lot of times we're talking to folks who are trying to graduate into retirement. Well, you've helped a lot of people do that already. So, can you give us a little bit about your background and how you joined your family business and got involved in your line of work? And we'll start there.
Absolutely. So the business that we're in is a business that really serves consumers, serves families, serves business owners. Our business, as you mentioned earlier, is to value existing life insurance policies and then represent policy owners in sale in the regulated life settlement market. My family started this business, my brothers and my father, back in 2003, so for over 2 decades. I joined the firm in 2007. I had been running a staffing agency, actually a healthcare staffing agency, but my father, my mother always wanted us to have a family business. So when the opportunity arose that my brothers and my dad were expanding Ashar, it was a great opportunity for me to join them. In our business, every day we're serving policy owners and really helping them monetize their existing life insurance policies. It's a business that's very gratifying. I learn a lot every day. We experience all different things with the clients that we're working with and the advisory teams that they're partnering with. We're helping solve problems using an asset that people already have and maybe don't realize that they can turn their existing life insurance into a capital event to help them with their long-term care planning or their retirement planning, or maybe the life insurance on a key executive can be monetized to help grow a company. So lots of different uses for it, but every day, seeing the impact that we can have on individuals and families, businesses, even charities, it's quite gratifying. So I appreciate you having me and introducing the business and our approach to your clients or your viewers.
Sure. No, I have a small concern in that you joined the firm in 2007 and promptly we went into the deepest recession since the late 20s. And I'm wondering if maybe that was a causal relationship. Is it possible that you entering the industry, in fact, caused the Great Recession of 2008 and 2009? You don't have to answer that. I think we all know the answer. And
I personally don't think it was correlated, but
no, I think it was you. So we're talking about life insurance now. Nothing is more exciting or more fun to talk about at like a cocktail party or at the water cooler.
That's right.
People can't wait to say, "Let me tell you about
sexy.
my life insurance."
So
it is just something that gets people so fired up. And of course, for all of my listeners, I don't know what cocktail parties you go to, but that's not what happens at the ones that I attend, unless Jamie's there, in which case that does happen. So life insurance is something so misunderstood. We've actually had some clients who refer to it as death insurance, which I find funny, only because the concept is, well, you have to die to win, and what a terrible thing that is. And I guess with term insurance on some level, maybe that's true. I
Mhm.
know there's ways to solve that, but in terms of a death benefit, there's no immediate cash value, or is there? The interesting piece here is that this is an asset, and people buy it, think they've got that box checked off, and put it in the drawer, just like they put a will in the drawer and don't look at for 15 years, or they valuable documents go in a safe at home, or heaven forbid, a safe deposit box, and never get looked at again. This is an asset that, like every other asset, needs to be managed, just like your real estate, just like your stock portfolio or your fund portfolio, just like your cash positions, your debt. Why don't people think of it that way? How did we go from, here's something that I can check the box, I'm done. It's like, you remember the game of life from the 40s? You had the option, the one-time option to buy life insurance. You either did or you didn't. And if you did, it created all these big opportunities at the end of the game. And if you didn't, you missed out on them.
Mhm.
Why don't people still see it that way? That was 1940, and it's still true.
Yeah, I mean, I think a lot of times life insurance is misunderstood by a lot of policy owners. They are sold it or purchase it for a specific protection need, and that's really the only time they think about it. And I think there is a real opportunity to recognize life insurance as an asset as property to maximize on its value. I know with your expertise in building cash within these life insurance policies and the opportunity to access that cash with that policy still in force, still having that protection should someone pass away can be quite powerful. Many times we're brought policies, again, whether they're individually owned by a business, owned by a trust, even owned by a charity, that are forgotten about. People aren't managing their life insurance assets. And I think to your earlier comments, if we can help policy owners recognize that life insurance is a buy and manage asset, not a buy and hold asset, it can be quite powerful. There's an opportunity if that life insurance need or want or ability to fund it changes, before someone just discards it, before they just surrender it or lapse it, to value it like they would real estate, art, jewelry. And when it is viable for sale, there's a secondary market, just like there is for cars or houses or even horses, or you might think of auction houses, how they can auction off hard to value property, sell it to the highest bidder. Our firm really acts as that auctioneer for life insurance assets. So before clients are just letting them go for the surrender value or lapsing them, there's an opportunity to maximize value in the life settlement market and sell policies for potentially more than the cash surrender value, although less than the death benefit.
Well, there's so many scenarios where this is a powerful tool, and life insurance in general, it's so misunderstood. I know Kevin Bacon. You talk about the 6 degrees of separation and those various things. The reality is that in my personal life, the life insurance that I've had since I was a kid probably has made me more money or helped me access more wealth than anything else I've ever done, because the life insurance that I had was used to buy my first home, which I parlayed into a meaningful capital event. It also helped me to start this business when no bank would lend to me. And if I look at it, the business is clearly the largest asset. The house is second, and both of them were funded because my parents had the foresight to buy life insurance on my life when I was 14. I mean, that's something people don't talk about. And of course, the life settlement market is something that most folks don't talk about in their 20s or 30s or 40s. Most folks are talking about that later in life. People buy life insurance. You mentioned it for specific reasons. What if I don't wake up tomorrow? My family needs to replace my income, or we've got debt we want to cover, or there's a business need. All of those things are valid. But there comes a point where maybe you don't need, and I put need in quotes because there may be reasons to want to have life insurance for tax reasons and other things, but there's a point where maybe you don't need it. At the moment where you don't need it, sometimes it's nice to have a cash infusion. And if you surrender a contract, it can create a terrible tax event. Neither of us are CPAs. We're not going to go into those details other than to say it can create a bad tax event to surrender a contract. So how does someone begin the process of figuring out, hey, what am I really sitting on here? I mean, it's kind of like you find the silverware in your great grandma's safe or something, and you realize, holy cow, this is antique somehow. Like, what are you sitting on? It's a gold mine of sorts. What's the start of that process?
Yeah, and I think just to touch on something you said earlier, I mean, we are, as an organization, as a family, firm believers in life insurance, that if people have a need, they like it, they want it, they should keep it. My parents, similar to your parents, put life insurance on all the kids in our family when we were 13. And that's actually the only life insurance I've ever qualified for. So I was diagnosed with Crohn's disease at 22 and have been uninsurable since then. So I still have my whole life contracts that my parents bought for us when we were young, so that we could, to your point, have access to that cash for buying our first homes or for using it in other areas. So I do think, life insurance is a wonderful asset to keep, to manage and maintain. My brother, who was diagnosed and is doing quite well today, but about 10 years ago with stage 4 cancer, his life insurance was what gave him the confidence that his family would be taken care of, knowing that he had it. So, I think when people are looking at life insurance, there's that opportunity to buy an asset there for the protection and or to build cash to be used in other areas like you referenced. But when those needs are once changed, especially with term policies and universal life policies, the market will value that policy the same way you might value, again, a piece of real estate, art, or jewelry. There's the opportunity, based off the age and the health of the insured, based off the ongoing premium costs, to value the existing life insurance policy. There's no exams required. It's not invasive. So this ability to look at your life insurance portfolio, whether it's 1 or 2 policies or, 5 to 10 policies, before you just discard it, value it. There's a valuation process that we have at our firm at Ashar, where we look at an illustration or a ledger that shows the future premium costs. We have a medical questionnaire we use to capture date of birth, any current diagnoses, prescriptions, limitations to activities of daily living. And we have analysts that will look at that information based off the market today and come up with a value, an indicative offer range that we would expect to negotiate. So, the process itself is pretty simple. It only takes probably a day or two once we have an illustration and that basic information to be able to provide you back, that data.
Why don't people know about this? How is it possible that something that can turn a small amount of money today or a large amount of money at some uncertain time into something in between today? I mean, that seems like kind of a good thing depending on your situation. Why does no one know this exists except financial professionals?
I think it's just, again, life insurance itself is something that many people kind of ignore. We've talked about it earlier. So I think that opportunity to look at different options that exist for it, or this life settlement solution, just isn't on people's radar. They don't look at life insurance as a property. Everyone knows they're not going to walk out of their front door and say, I'm leaving Maryland to move to Florida and just leave their house there. They know that their house has value. They're either going to sell it or maybe they're going to run it out. First, they're going to figure out what it's worth. I think life insurance for decades has been, something that people bought for protection or security. That need changes, they automatically just think their knee-jerk reaction is, let it go, surrender it. We see that changing. I do a lot of speaking, as you mentioned earlier, all over the country. So we're spending a lot of time educating advisory teams about the market, some consumers as well. I sit on planes with all my travels, and I look at what I do almost as a public service announcement, because to your point, people don't know this option exists.
Wait. If I'm sitting next to somebody on a plane and they say, hi, I'm in the life insurance settlement business, I immediately have something better to do. I put headphones in, like, you're out, forget it. Like, I mean, I guess people, look, you have more charisma than I'll ever have. I get that. But how do you get somebody, like, the elevator speech when you're in the life insurance world has people hitting buttons to get off sooner? No. Like, how is that a thing that people actually will sit and maybe learn something from you? Because I think you're one of the great minds in our business, and you really are an incredible resource, but you're totally unknown. So when you say life insurance, my headphones are going on. I suddenly have, I don't care what I'm listening to. It could be dead air. Like, how do you do that?
I quickly lead with we don't sell product, but no, I really do. A lot of times, just that random talk on the airplane, not getting, very surface level, not too deep. People say, "Oh, where are you traveling? Why are you traveling?" So I say, "Oh, I speak around the country about the life settlement market, this opportunity to actually sell existing life insurance policy for more than what the carrier would give you." And they're like, "I've never even heard of that." And then I go into some additional information because I think it's a win-win. I always say for advisory teams that we speak with or family members, people that we're talking to, what the life settlement option does is provide a potential solution of creating 6-7 figures of liquidity in some instances for other planning needs. So on the plane, people love this idea. They're like, "Well, I know my parents have life insurance or my business has life insurance. Will it?
Yeah.
Can I sell it?" Because people like kind of taking something that they thought was worthless unless they passed away, to your earlier point, and turning it into a significant liquidity event.
I think you need to have a hat made that says, "Hi, I'm in the life insurance business," or something, and see if you can get an empty seat on a plane before anybody even meets you. Because it's one of those, it's kind of like saying, "Hey, I'm not even going to compare it to other industries." It's immediate. Remember Groundhog Day? Remember that poor character in the Bill Murray movie who every day, Ned Ryerson, wasn't that his name? The character's name?
I think it was Ned. I don't remember his last name, but
run from Ned. For those of you old enough to remember that movie, that character's priceless. And that's what people think of when they hear life insurance. So you mentioned a little earlier that your parents bought life insurance for you when you were a kid. And certainly I had the same experience. And that your insurability changed when you were really young, which is, that's a hard thing. I mean, on lots of levels, it's a hard thing, but just looking at it objectively and financially, it limits certain options. And so when we encourage people to insure their kids or grandkids, and my daughter had life insurance as soon as she had a social security number, because I'm just a believer. But there are ways now to preserve insurability so that young people have the ability to buy more with no medicals in their 20s, 30s, and 40s. I don't know that existed a whole lot when you and I were kids. And I am older than you. We discussed that earlier, and I'm very sad to hear it. But I'm older than you, and I don't. That just means wiser, Jamie. But that is something that people don't think about either. That you're not only creating an asset and doing some phenomenal tax and future gift planning and other things, as well as creating family legacy and all the things that are positive about it, but you can also protect your kids' insurability so they're not diagnosed with something at 22 and suddenly, down the road are in need of that and can't get it. Do you see a lot of that?
I think I see it because I look for it a little bit. And I will say when I'm speaking around the country, I do bring up the importance of protecting insurability. We're seeing advisory teams and clients sell policies on Gen 1 to put new insurance on Gen 2, Gen 3 while they're still insurable. I'm very sensitive to it in the sense that, I was diagnosed at 22 with Crohn's disease. Well, my parents put insurance on us at 13. It did have that ability to do, I think it was like $75,000 additions without any type of underwriting, kind of every 5 years up to 40, which we took advantage of. But I do think it's really important. And there's a lot of childhood diseases that are terrible that if your viewers have the ability to actually put insurance on their kids or their grandkids, just to give them more options later, I highly recommend it. Think of all your friends whose kids have like type 1 diabetes. I was watching a commercial on TV the other day, and it was just talking about childhood cancer and the amount of kids. They have something crazy, like 43 kids a day are have some type of diagnosis of cancer. So, that all of that is really difficult. So if we can, balance it out a little bit with at least having those protections and those things available, I think it's really important. With the Crohn's disease history I have, there's kids that suffer from it. There's 90-year-olds that suffer from it. So I'm pretty involved with the Crohn's Colitis Foundation. I was president of the North Florida chapter for years. They're involved nationally with that organization. I'm sure your viewers have different nonprofits, charities, whether they're health related or other areas that are important to them. So, we do a lot of work within the life settlement space for charitable life settlements, which I'd probably say is some of the most gratifying sales that we've been able to participate in with our clients. This opportunity to take an illiquid asset, turn it into a liquidity event that is helping protect, in some cases, children or build homes or different things like that. So, I thought life insurance is valuable, whether it's for protection or its ability. I always used to joke around when I first started, but I think it's meaningful where the value of a life insurance policy isn't just the death benefit, but also its assignability. So, that's powerful.
So I'm a big believer in obviously philanthropy and involved with lots of organizations as you are, and feel very strongly about that. And life insurance is an asset that is utilized frequently for planned giving, for larger gifts and bequests and other things. But I've also served on enough nonprofit boards to know that there's the bird in the hand where a nonprofit needs the money now. So despite the fact that a bequest is a lovely thing, if you're 62 and you're making you're naming a charity as a beneficiary, or you're even assigning a policy to them, God willing, you've got 30 years left on this earth, maybe more. And so the charity's not actually going to reap the benefit from the death benefit for a very long time. Plus, you'll never see it happen. You'll be gone. That's the nature of the beast. So life settlements are a way to, rather than surrendering it and potentially paying taxes or assigning it directly, you can sell the contract and then gift the proceeds to charity, or you can assign the contract, I assume, to the charity who can sell it. Is that a true statement too? Can the charity do that as well?
They can.
So in that case, you're making a larger gift than maybe your bank account or brokerage account could withstand, with an asset you have that you don't need for its intended purpose. And you're maybe changing somebody's life or an organization's trajectory today rather than waiting until you're gone so they can say nice things about you. That's a big deal.
Yeah, I think that is. I think there's something to be said about giving while living, being able to be there for the ribbon cutting ceremony or be there to see the impact of the gift. We used to always say you don't have to be an angel looking down to see what your life insurance policy, how it impacted the organization that was important to you. I think another area where we're seeing the benefit of charities and nonprofits being aware of this life settlement option, or their planned giving teams being aware of it, is you have many donors that are living longer than expected. So many times we're seeing policies that were gifted, every intention with enough cash in the policy to last until the insured passed away, keep the policy in force, and then at the passing of the insured, the death benefit go to the charity. However, with increased longevity, which is wonderful in a lot of ways, with increased longevity, though, and life expectancy, many donors are outliving their gifts, and the charities are coming back to them saying, hey, wonderful that you're still here. However, can you start paying more premium? And many donors don't want to. So I think it's another opportunity for charities that many times aren't set up to pay premium to be able to capture some value. And I think that's a big deal for your viewers that are philanthropic or maybe sit on the boards of charities. I would say on a quarterly basis, we're speaking with charities around the country that have policies just by attrition falling off that they held on the books for a long time. They run out of cash and they just go away, and no one's thinking until, hopefully they hear, this.
Well, they sit next to you on a plane, apparently.
Or they sit next to me on a plane. That's right.
Right.
Or they read maybe one of the magazines or journals, but that before they just cancel something, value it.
All right. None of our listeners, I shouldn't say none, that's painting with a broad brush, but I suspect no more than 2 of our listeners or viewers are reading those journals, because that sounds dreadful, quite candidly. I don't even like to read them, and I have to know this stuff, or I have to rely on you to know this stuff. By the way, you did mention, something about being an angel looking down on charity. There's nothing you're going to do during this podcast to get me to refer to you as an angel at any point. Just so we all understand.
I thought we had to change the lighting because I have a glow. Going
you
on.
always have a glow, but I'm not referring to you as an angel under any circumstances. Incorrect. So let's get back to your story a little bit, because we've talked about the sort of the strategy and a little bit about it, and we don't want to get technical. This is not the place for that. But just from a human standpoint, can you maybe talk about one or two really exciting or wonderful wins that you've had over? I'm sure you have thousands of them, but can you think of one or two without inadvertently sharing someone's identity, of course, about some wins where you've seen this make a huge difference in a family's life or in a charity's or a existence?
Yeah, I'll start with actually it's a case and a project that my brother worked on, but I think it really kind of leads into what we were just where we just came from. Is we were working with an advisory team and their client that ran nonprofits and drug addiction organizations, helping people to move away from addiction. Well, the owner of the company ended up being diagnosed with a very significant issue and health issue that was going to cause him to have to walk away from the business. But they were impacting so many lives that they looked at what can we do as an organization to keep everything running. And their life insurance ended up being, and they had a portfolio of life insurance, but one of the policies was viewed as the vehicle that could help them keep the business going while the individual had to step away and focus on his care. So the life insurance allowed them, it was able to be sold. I think it was about a $2 million policy. It actually sold for about $1 million, but they were able to take that cash event and hire a COO and a CEO to run those centers, and allowed the owner to step away and focus on his family and his care. So this ability to take an insurance policy and monetize it to keep businesses going, to keep things on track and allowing people to focus on their own care, their families, I think can be quite powerful. We see other situations where maybe smaller policies, we see a number of policies, whether it's at $250,000 a face to $500,000 a face, where families are having to make a decision on, do we keep paying the life insurance, or how are we going to fund our loved ones' long-term care needs? And in those situations, it's more of a need-based sale, but being able to take an asset that someone's paid into for decades, that they're on the fence of saying, we're going to just let it go, let it lapse, or surrender for very little cash back to the carrier, or we can fund that, but then we don't have the funds to really pay for mom or dad to be in a good facility. We've had the opportunity to help them monetize that policy that maybe the parent paid in for decades, and then use that lump sum cash event to help fund their care. So it's quite powerful. Those are kind of, one is that need-based sale, like they can't afford both. The other is using the life insurance as that vehicle to create liquidity to keep things going. So, I think if the audience remembers life insurance as an asset as property, they'd never walk away from their house. They would never say, oh, you know what, I've stopped wearing my nice watch, I'm going to just throw it away. I like my Apple Watch or something else. But they would never do that, right? If you had a Rolex or Cartier or Patek Philippe, whatever it might be, if you've got a nice watch, you know better than to just throw it in the trash if you're never going to wear it again. You'll value it and either sell it or maybe give it to a loved one to remember you by. But you wouldn't just trash it. For decades, right, policy owners have been trashing their life insurance policies without realizing they could be worth tens of thousands, hundreds of thousands, or even millions of dollars. So, we see that impact every day with the clients that we're representing, and that opportunity to create a significant cash event that could help someone stay in their home. We've had those scenarios. Help someone keep their business open. During COVID, COVID was terrible for a lot of things, but I will tell you the impact we were able to have on businesses and individuals by helping them, take advantage of the power of their life insurance policies to help fund other things that were important was quite meaningful. That was a time where we really, I would say had significant impact on the clients that we worked with advisors.
So we are running short on time, and I've got like half a dozen things I still want to talk to you about, and share with our audience. First and foremost, if folks want to learn more about this, for our listeners who have life insurance already or whose parents do, or even whose grandparents do, and they're trying to figure out what they want to do, would you advise them to start poking around and looking at your website? Would you advise them to talk to their financial advisor or insurance agent? Is it all of the above? What's the first step for somebody who wants to just learn more about this?
I think all of the above. I would start with you if they work with you, because I think you're a wonderful advocate for recognizing the value of life insurance. I think if people want to read up on it, I don't recommend just surfing online and doing that type of research or putting data in. I do think going to a website like ours, and maybe any links that you put up associated with this podcast can be quite relevant. There's lots of good information on our website, ashargroup.com. Ashar actually comes from the Old Testament. My father wanted to create a company name that would represent how we approach this market. And Ashar means do what is right, you will be blessed. But it's 2 A's. So I like to point that at ASHAR. And I would read up to it, but I would just call you or call their financial advisor or call our firm. We have people that can help provide additional details about it.
And Jamie, I get to ask you my favorite question on this show, which is, what do you want to be when you grow up?
It's a great question. What immediately comes to mind is I'd like to be my mom when I grow up. She's amazing. It makes me want to cry, but she's a wonderful person that I aspire every day to be like. Patient, honest. Yeah. She's fighting cancer right now, so it's a lot, but yes, she's amazing.
My goodness. Well, our thoughts and prayers for your mom and for her health, and that's a great answer.
And I'm crying, Eric. What are you doing? It's
we're not ending. We're not ending that way.
Okay, good.
No show ends with tears.
Was it
First
Barbara
of all, I want
Walters that used to make people cry? I can't remember, but they're always like, "Give me titty, make me cry."
Well, look, I didn't mean to make you cry. I'm gonna. I know it's just. I'm going to shift gears and have a little fun at your expense, which is I hope you and I both live long enough to see the Orioles win a World Series. We found a picture in our archives that includes the two of us at a baseball game probably 12 years ago. There we are. And
looks like yesterday.
I want you to know you have a halo over your head there, too. So clearly you actually are an angel, Jamie, and you got me to say it. And we're not ending on tears. We're ending on joy. That was a fun night. Yes. And I don't know if the Orioles won or not. I think they might have. It might have been a playoff game even.
Well, remember, my parents came from Maryland. So I grew up like with the Cal Ripken and watching all of the Orioles games. And my aunt and uncle had seats over one of the dugouts when I was little. I remember it. So you brought back a lot of nostalgia with that event. It was amazing also to hang out with you and your colleagues.
Very cool.
Very good times.
Cool. Well, I can't thank you enough for joining. First of all, you dropped a lot of knowledge on everybody, which is great. But moreover, I think you were very authentic and personable, and I knew you would be. And you're an angel. Who knew?
I knew.
Thanks for being on the show, Jamie. It's so good to see you.
Glad to be here. You're amazing.
I'd like to thank everyone for listening and watching today. If you enjoy our show, please don't keep it a secret. Tell your family and friends so they can join you on your journey to financial freedom. And please take a moment to leave a review or rating on your favorite podcast platform. Those are priceless to us. We'll be back next week with another installment in our Diary of a Financial Advisor, and in 2 weeks with another engaging guest. Maybe not an angel, but an engaging guest. For now, this is your host, Eric Brotman, reminding you, don't retire, graduate.
Securities offered through Kestra Investment Services, LLC. Kestra IS. Member FINRA SIPC. Investment advisory services offered through Kestra Advisory Services, LLC. Kestra AS. An affiliate of Kestra IS. Kestra IS or Kestra AS are not affiliated with Brotman Financial or any other entity discussed.